was not a good thing to do. And that chart kind of flattens it out. But in fact, in real terms, adjusted for inflation, if you had bought gold in 1980, by the year 2000, you would have lost 75 to 85% of your money. That's a big loss over a long period of time. So you see, gold doesn't always pay out. And yet, look back a bit further from 1971, or back on this other chart from 1900, and you can see that there are periods. And the year 2000 is a critical period. You can see that owning gold then and owning gold in 1970 really paid off a lot. Because if you didn't own gold and you held paper money, you lost a lot of money. So looking back, that chart shows us from 1900. But, when the gold price was set in 1900, it was fixed by the state. It didn't get there automatically. That, too, was a process that went on cyclically for many hundreds of years. Money's been around for a long time, gold and not gold. And the Romans, for example, had tried using non-gold for a while. They made coins out of leather. And for a while, towards the end of the Roman Empire, the Romans refused to accept their own currency in payment of taxes. Because these currencies that are not backed by metals have a way of going bad. In fact, they always went bad. There's no exception throughout all of history where a currency that was not backed by precious metal ever survived. And during the 18th century, they had the bubbles, the Mississippi bubble, the South Pacific bubble, John Law's bubble, where those were bubbles created by paper money. That is to say, money that was not convertible into something more than paper, convertible typically into gold. And that period was followed by the Napoleonic Wars. And during that period, the governments went broke, and government-issued paper was not very valuable. And so people learned from that. They learned from that experience. And so we had a very long period of peace and prosperity in the Western world, in Europe, following the Napoleonic Wars. And why? Well, because they used gold. They had a stable money that lasted for a very long time. And you can see on that chart, well, you don't see it very well because relatively speaking, the changes are so small. But gold was in the currency. It was the currency until the wars of 1914. And in those wars, several countries went broke. And that perturbed the gold market. And that whole period I'd say it barely shows up here, but those were big changes that from, say, 1914 until the end, 1940, was a turbulent period of war and devaluations. And Franklin Roosevelt in America, he confiscated the currency. He confiscated the gold. And he said, from now on, you've got to take our paper. And then he devalued the paper so that people who gave up their gold, they immediately lost 60% of their money. But anyhow, that period shows up, and at the time, it was very turbulent, but now, looking back at that chart, it looks like nothing. And then after the war was over, World War II, there was another quite nice period of peace and prosperity in which it did not pay to hold gold. Gold didn't go anywhere. And then we see that period coming to an end in 1971. Now, why 1971? Well, something very, very important happened in 1971. After all those years, from the Napoleonic War until the administration of Richard Nixon, gold had been in the money. It had been behind the money, backing the money. Various sorts of deals had been made, but gold was always there. And then in 1971, August 15th, Richard Nixon went on television to tell the American people that gold henceforth would not be in the money, and that people who had money, had dollars, could henceforth not turn in their dollars for gold. And he was talking mainly to the French, who had lots of dollars. They came from Vietnam, and those French wanted to turn them in. So after that time, 1971, we have been living in what is fundamentally an experimental money period. There's nothing like this has ever existed, and anything that was even close to it came to an end fairly quickly and disastrously. So what we're in is this period in which we're all experimenting. You see what happens when gold is taken out of the money supply. And so here we are. Now look at that chart again. 1971, what happens? The price of gold goes way up as people anticipate the paper dollars going down. And then, almost a miracle, around about 1980, the price of gold goes down. Now, that caught many of us, including me, off guard. I didn't expect it. And I didn't understand that Kurt Volker, when he came in 1979 as the chairman of the Federal Reserve in the U.S., Kurt Volker meant business. He was serious and he was competent. He knew, he understood, and he actually saved the dollar and he saved the paper money system. How did he do that? Well, he put up the prime rate to 21%. It was remarkable. There was a worst recession in America ever. They burned Kurt Volker in effigy in Washington, but he stuck to his guns and he succeeded. And what you're seeing there is another period of peace and prosperity following Kurt Volker's chairmanship of the Federal Reserve, in which the price of gold fell. You did not need gold during that period. It was not a good thing to have. And so during that period of peace and prosperity, gold went down. The dollar was stable. The dollar went up in terms of gold. And then in 2000, look again. Now we have another inflection point. And this began a period in which we were no longer peaceful. We were no longer prosperous. And now we are in a period of crisis. And that crisis began in the year 2000 roughly, 2001 probably more precisely, and continues to this day. All you have to do is read the newspaper, and you know that we are in a period of crisis. Europe could come apart any day. The deal that has been made to back the banks and back the sovereign currency of Europe is a very shaky deal, and it is not at all sure that that deal will go forward. But you would say, so now you have to ask, which I'm sure is the question we all want to know, well, where are we now? You look at that graph and you can imagine Kurt Volker coming in again. And Kurt Volker is still alive, by the way. But can Kurt Volker come in? Well, by the way, they asked him. they put the question to him, and could you come in and save the situation? He said, no, I couldn't do it. And why? Because the situation is just too different. And if you look back between 1980 and the year 2000, the world changed, and especially the U.S. changed.